everyone, this is Ashley Jamerson coming to you from Ashley Lambert Realty, and today I want to talk to everyone out there who reaches out to me because they want a deal, they want to steal, they want a foreclosure. So first and foremost, let's chat about what a foreclosure is and what a foreclosure is not. A foreclosure is a bank-owned property. Typically the bank or a representative from the bank has never ever seen the property. They can't make any comments about the condition of the property. They really can't give you any disclosures on the property. They typically just hire a real estate agent or a real estate company to list all of their foreclosures. And a lot of those foreclosures can be found on websites such as homepath.com, which features a lot of VA foreclosures, and then HUD Home Store, which features a lot of FHA foreclosures. If you're interested in buying a home from HUDHomestore.com, I do have my NAID number and I can help you here in the Charlotte area. And then of course there are other foreclosures from smaller banks and larger banks that may be foreclosed on conventional homes that went through the same process. They don't know about the condition of the property. They basically have a realtor go in there, say how much it's worth, list it, take very basic photos, and then attract buyers. So now that that's out of the way, let's talk about getting a deal, getting a steal in foreclosures. Just because it is a bank-owned property does not necessarily mean they will give you the property at this amazing price, like below list price. Now there are times, there are markets where that totally works, but right now when I'm filming this video, we are in a seller's market, so even foreclosures are closer to market value if they are in move-in condition or move-in ready type of thing. The homes that are typically found on homepath.com are move-in ready homes. They typically go in there and paint the walls a basic beige. They have white trim, and then they have like the medium darkness type carpet, builder grade carpet. So they do make the home appealing for first-time buyers who want a more move-in ready home and that will qualify for FHA, VA type loans, which have minimum requirements. So now that that's out of the way, let's talk about being sold as is. If you've seen my other videos, you know that every single home on the MLS is sold as is, and sometimes the seller is serious and sometimes the seller is not serious, or sometimes they're educated and not educated. That's my dog. So what it means when a house is sold as is, it means just that. Typically, when you are buying an existing home on the MLS and you go through your home inspections and things, if things don't meet code, if there's an active leak, an electrical issue, some type of major structural, of course you can negotiate those repairs, but overall, cosmetically, the house is sold as is. So it's that same situation times about 10 with bank-owned properties. They typically will not fix anything. They may give you a credit, but they will not fix it unless they have hired a company that has a section of it that is specifically for repairing homes. They don't do it. They don't go through the trouble. They'd rather you give a credit, or they'd rather give you a credit for the house, if that makes sense. Negotiating with the bank is always interesting because you're basically negotiating with a computer. When I am submitting an offer on HomePath or HUD Home Store, I'm entering in basic information, and I may or may not have to upload the actual North Carolina offer to purchase, but I am entering in like your information, your offer, how much closing costs, any type of credits you want, home warranties, things like that, into the computer. And overnight at 11:59, 12:01, the computer will either accept or reject the offers that were submitted. If it hits that magic number and if all the documents are sent in a timely manner, your offer is accepted and it becomes a contract. That typically takes a little bit longer than the everyday offer to purchase on an existing property or a new construction. So be prepared to wait 3 to 4 days for everything to be officially official. Another thing to note is, and this is a really funny story, I had a client who was very, very interested in this one particular foreclosure, and we lowballed the crap out of it. And the bank was like, you know, playing a little ball with it, which is very rare. But she wanted to submit a letter of you know, just a letter to say how much she wanted the property and how the property fit perfectly with her family and how her daughter would love it and blah, blah, blah. The bank does not care. They're looking at their bottom line. Typically, they've already had a loss on the property when it went into foreclosure. So they're typically trying to recoup some of that loss. So a letter will not do it. In this situation, money talks. So submit a good offer. If they do negotiate with you, just know they're not going to go back and forth with you. And during your negotiation period, you're counter offering and someone can come in and swipe the property, which is exactly what happened in her situation. So you're negotiating with a very cold computer bank type situation. So come out guns blazing if you want the property, if you feel that it's worth it, with what you are willing to pay for the property and what you are willing to say, well, I tried, if you lose the property. Another thing to consider when you are looking into buying a foreclosure is, do you honestly have the stomach for a fixer-upper? There have been so many times where a buyer has reached out to me and they've said, Ashley, I want this fixer-upper. I really want a foreclosure because there's going to be equity in the home and all these things like that. And then once we start looking at foreclosures, and some of them have problems like roof or septic well issues.
And I hate septic and well issues.
But new HVAC, maybe old plumbing, maybe older electrical, new carpet, new paint. Now you can ask for some credits, and sometimes the bank will say that there is a $2,500 credit for X, Y, and Z, or there's no refrigerator, or there's no stove, and they'll give you credits for that. But replacing things to meet your likes, to meet your standards, is a completely different situation. So we'll walk through the property and I'll give basic quotes of things that I know from my renovations and things like that, and just doing real estate for the past decade. I'll give recommendations, and then they're like, oh my goodness, when the price really starts getting up there, it's not cheap. It can be stressful because you're buying the house knowing you have to fix it, and a lot of people get freaked out about that. And those ones that gets freaked out typically purchase new construction, which is its own little animal. But you have to ask yourself, do you honestly have the stomach and the pocketbook, the money, the dinero to make it work? If you don't, then a foreclosure may or may not be for you. I mean, there's only so much I can do. I can help you find the house in the area you want, in your price range, but ultimately you have to decide if you can handle the stress of fixing up your home. And it's not always like tons and tons of stress, but yeah, it can be stressful. It just can't be. One of the other things that buyers don't consider when they're looking at foreclosures is if the loan type that they are approved for will match it. So if you see my other videos, I talk about down payment assistance programs. I talk about USDA. I've spoken before about VA loans. So all of those loans have minimums of the condition of the home that you're buying. If there's a major electrical problem, if there's a major plumbing problem, if there's a structural problem, if there's a whole bunch of broken windows at the siding, at the roof and HVAC, if there's issues wrong with those items, then most down payment assistance programs won't touch it, because those are programs to help first-time homeowners purchase a home, and they don't want you moving into a fixer-upper. And then they want to make sure that the home that they're giving you a loan on is actually worth it. So you can go ahead and wave bye-bye to half of the down payment assistance programs, USDA, FHA, VA. Wave goodbye to them. You're looking at conventional products, or you were looking at FHA 203K and HVA, which is a rehab product for veterans, for those with a VA loan. There are programs that will help you purchase a fixer-upper, but you have to approve for those loans, and the interest rate is typically a little bit higher, which can affect your purchasing power or your purchase price that you are approved for. So you do have to make sure that before we go out, you're not armed with the wrong loan, looking at the wrong property, and that you know the cost of getting an FHA or any type of rehab loan. You know the cost of it, the monthly cost, the out-the-door cost, before we look at homes, so you can again stomach the cost of the house. So either way you flip it, you're paying for it. So you need to make sure you're cool with that. The last thing on my list that you need to know before you start looking at foreclosures is that the deed can be very, very different than a typical deed. So there are two deeds I'm going to talk about. I'm not a lawyer, I'm just a real estate agent, but these are the two that I run into the most when it comes into buying and selling. There is a quitclaim deed, but that's not really something that I deal with on a day-to-day basis. So a general warranty deed is what you typically would receive as a buyer when you close on a home, because that deed is free of any issues. Like there's no title issues, there's no liens on the property, like there's just no issues on the house. And the seller can verify that. They have title insurance, the attorney can look at it and they know that there's no issues. Now, a special warranty deed is special. And it's special because that is basically saying that the seller, the person who owns it now, which is the bank, who's never seen the property, who can't make any comments about the property because they don't know, the seller is saying, we haven't done anything to encumber this property's deed or title. Like we haven't done anything to jack things up, but we don't know what the seller did. And obviously the seller foreclosed on the home, so there may be mechanical liens on it, there may be tax liens on it, HOA liens on it, but we'd have nothing to do with that. Since we've owned it, we can guarantee that nothing has happened. So of course the attorney is going to do as much title work and searching and things like that, but you are going to receive a special warranty deed for foreclosures. Now, I haven't had any situations with my clients who have purchased a foreclosure, but I'm pretty sure there's realtors out there who have had horror stories. But it is good to know that you are getting a different deed and that that deed comes with a little bit of risk. So definitely keep these things in mind if you are considering buying a foreclosure. I typically don't send out foreclosure lists. I send out homes that you can afford in the area that you can afford, that matches the loan type you can afford. But I do not filter out foreclosures. So if a foreclosure falls in there, then I'll definitely show it. But I definitely want my buyers to be aware of the risk before we start playing around with their money. If you have any questions, comments, or concerns, all of my contact information is below. I would love to be your realtor, whether you are selling your home or buying your home or doing both. I am here to serve you. Talk to you soon. Bye.